What's up, everyone? Welcome to the Daily Macro Update for Thursday, September 25th. Taking a look at the macro data for today, we had a slew of positive economic data, which in this market right now, where good news equals bad news, this actually caused the market to sell off more. The S&P 500 remains in bullish trend, as you guys can see with the green background that I have. That has not changed at all. And so, seeing this, there's a lot of things that were on sale. So if you were selling some over the past couple weeks into strength, well, now you have an opportunity to buy some while everyone else is panicking. So hopefully you guys were able to recognize that. If not, no problem. We have our free newsletter called the Daily Index Ranges, which you can join for free. Just DM me the word daily, and I'll send you a link so that you can sign up and get those emails every single morning at 8:30 a.m. before the market opens. Now, with this good macro data, we had still a pretty high chance of a 25 basis point cut for the October 29th Fed meeting. Still remains very much, what's going to happen at 85%, although yesterday it was nearly at 92% chance. So that was a decent 7% exchange there between pausing versus cutting. But we'll see what happens. I mean, we have labor market data coming up next week or the following week. And then after that, you have another round of inflation data that is set to accelerate. So we could see this be the trend here leading up into the October Fed meeting. And so, yeah, I wouldn't be counting Fed rate cuts as a guarantee just yet. We still need to see how Jerome Powell and the Fed interpret these, these stronger conditions. But yeah, I mean, taking a look at something like initial jobless claims, this was the lowest initial jobless claims since I think it was, let me see here. Yeah, since July of this year. And you can see pretty much this is the lower bound. A very large deceleration from just a couple weeks ago, and that was at 264,000, right? Remember, everyone was freaking out. So yeah, I mean, now that jobless claims are starting to normalize here, that the market's not liking that because it means no Fed rate cuts, or it means possibly a slowdown in the pace. And then, yeah, I mean, that's pretty much what we're seeing today. What I did notice as well was that existing home sales remain near 2008 levels. So this is still what's happening in the background. Right now, new home sales are selling for more than existing homes, and so I think that right now, until you see this trending higher, you're going to still continue to see a lot of pressure on the housing market. And so, if you're someone who is looking for a house potentially in the next year or so, it might actually help to wait for this to start trending upwards as, this comes back into more balance. So, definitely not financial advice, but that's just what I'm noticing. But yeah, I mean, the real GDP number, the third estimate, nearly 100 basis points higher than the initial advanced estimate, which was at 3.0%. And then this third estimate was at 3.8%. So, what is really going on here? Is the market actually, or is the real economy actually slowing down? Because if it's accelerating, then why is the Fed even going to cut rates if things are actually improving? Right? That brings up that neutral rate that nobody really knows, but the Fed is always trying to achieve it. And so if that's actually rising, then how much are they really going to cut? Pretty much the same story, though, over the past 3 years, and the market has been able to tread higher since all of this kind of no landing scenario keeps happening. So, I mean, look, if that's the case, I welcome it. You should probably welcome it too, because the market has proven that it could actually perform in that type of environment. So yeah, taking a look at the actual S&P 500 here, nice little dip. We'll see what happens from here. A lot of buying action happening towards the end of the close here with 7 minutes left until that close actually happens. And so, yeah, among the main mega caps that are correcting, the leading one that's been having a correction is one that's been going up a lot, which is Tesla. I would like to see Tesla come down and retest like somewhere in between 380 and 370. If we bring up the trading ranges, right now, the low end of the trading range for today is around $400 per share for Tesla. I wouldn't be surprised if that continues on. So, yeah, when it comes to this, Tesla is in bullish trend, but you do want to just maintain, um, just looking for that low in the trading range, right? Because, just looking at these on the ranges, let's see if I can pull up the drawing tool for a circle. Yeah, so if you just look at this here, right, you had an opportunity there. Let me make that yellow instead of, yeah, so you had an opportunity right there. That was where, it was bullish and it tapped the low end of the trading range. 1 second. You had another opportunity right here, as well as just a very brief one right there, right? So each one of those times, it did clip the low end of the trading range after it went bullish at the beginning of August there in our model. So interesting seeing that there, but yeah, I mean, it's still kind of near the top end of the trading range, or actually it's in the middle now, but the low end of the trading range will definitely lower by the time tomorrow opens up. So going to wait a little bit there. Taking a look at the S&P 500 ranges with the ETF SPY. That did today have a slight, wick down to the low end of the trading range. So it did provide a little bit of a buying opportunity, but, it's been pretty much maintaining that, the last time the S&P 500 in our model gave a chance for an opportunity at the low end of the trading range was on September 3rd. And so that was the great time to add some if you guys are paying attention to that, or if you're in our trading ranges. And then, you had 1, 2, 3, 4, 5 times to take a little bit of profit on the way up before you had another correction here. So it looks like you could have also bought right here and also right here, but that's why the ranges come in handy, because it just gives you pretty decent look at timing wise, which is one of the most important things, right? Yeah, with that too, you're having a little bit of a deceleration in Bitcoin. With that candle today, if it's going to close here, that actually brings Bitcoin back down to a neutral trend from bullish. So that would mean that Bitcoin is no longer bullish in our model. And then, as we know, Ethereum went neutral a few days ago. And if I go to Ethereum in our model, that actually is breaking close to bearish trend. I'd actually still leave this as neutral, but we'll see what happens over the night period here. What continues higher are, other precious metals. Gold. I mean, look at silver right now. Silver and hard assets, they continue to perform. These are things that have been constantly a theme for us. Yeah, gold, silver, precious metals, uranium, the miners for each of these, silver and gold miners, all of those continue to perform. Man, I accidentally hit one of these filters and it messed up the order of everything here. Interesting seeing a little bit of a pop from oil. Definitely going to keep our eyes on that. Despite the craziness and fears happening today, the VIX is still well below, 20. And so, yeah, this is just a pretty decent buying opportunity here. Yeah, and what I mentioned in that video that I just put out was that you're seeing a pop from the low end of the trading range on the dollar as well as bond yields, two things that are oppositely correlated to the S&P 500. And so when you find that oppositely correlated assets are at their extremes of the trading ranges, that's typically a sign, right? That's essentially what I was trying to explain in that video there. But let's go ahead and get into some questions here with the market here about to close in the next minute or so. Do you think Bitcoin will correct further? It possibly could. I mean, Bitcoin, the biggest factor that I see is that, because it does track really well net central bank liquidity, which is bearish right now. So this had a pretty big $800 billion drop. And, you know, Bitcoin does a really good job with tracking this. But the thing is that when this flops over, it is a pretty big headwind for Bitcoin. So I wouldn't be surprised if that continues being a headwind for Bitcoin, right? If we pull up that chart here, you know, kind of similar looking. So yeah, I mean, it also put up this lower high here. And if we bring up the volume indicators, do I already have them up? No, I don't. Hold on 1 second. Let me bring up volume and then the volume table indicator. Let me take off the table. So yeah, what's interesting is that you can't really see it on the trading view indicator, but that's why sometimes I just take it off completely. And then let me actually move this up just so that you guys can see it a lot better, what I'm talking about here. All right, so I have volume here. The green represents the 1 week average volume, and then the blue represents the 1 month average. And so typically when the green line is above the blue line, that's volume accelerations or a bullish trending volume. And then opposite, when that green is below the blue line, that's typically a slowing volume trend, right? And so, you know, what's interesting was that for the majority of this acceleration here, right, you actually had, as the price of Bitcoin was going up, you had volume actually going down, which is what? That's a bearish divergence, which typically means, you know, this is a good time to sell some, right? You got to look for the divergences because that will tell you exactly whether to be cautious or to be aggressive. It's the context in which prices move, right? And that's one of the things that actually, one of the topics that came up in our most recent member discussion was the divergences between volume and price. And yeah, it's kind of similar to the analogy of, you know, it's not what you say, it's how you say it, right? You can say two different words and they can be completely different meanings depending on the tone that you use, right? And the inflection. Well, think of the price action as words and then volume as well as volatility as the tonality of those words, right? And so then you started to see volume start to flip here as we started to have a big red day on higher volume. And so then what happens when you start to have prices come down on higher volume? That's a big bearish confirmation. And so, long-winded answer to your question here, and I'll just highlight it here, relaxing sound. Do you think Bitcoin will correct further? It's looking like it has a higher probability of doing so. Where can I get that indicator? Which one? Are you referring to the trading range model? Or are you referring to the volume? The volume one we have for free, this trading range model indicator that we've created, that actually isn't available for the public. That's only for our partnership circle members. If you'd like to learn more about how you can get access to this so that you have it on your trading view, you can just shoot me a message and you know, I can send you an application for our partnership circle. The reason why is because it's not for everybody. You know, we just want to make sure that it's something that you know, wouldn't actually be a detriment to you, right? So yeah, just shoot me a message. We can talk about it in the chats there. But either myself or someone from my team will be chatting to you there. In the meantime, if you just want you know, those trading ranges for the SPY, QQQ, and IWM, we have a free newsletter that goes out every single morning at 8:30 in the morning before the market opens, so that you can get those, right? Which, just shoot me a DM with the word daily, and the auto response to your keyword reply will be an invitation to the free newsletter. So you can get that there too. Is copper back to bullish trend? Let's see. I actually haven't been looking at copper. I know that it has been gaining some strength though, after that large tariff decline. Let me see if I can find it here. My entire, for whatever reason, my entire list here got scrambled when I tried to organize it by one of these, you know, column organizers here. So just give me a second. Here we go. Yeah, so I mean, it's been about 2 months and, this is up, nearly 9%. Yeah, I mean, I would say that if copper can close above this level here, then it'll definitely go back to bullish trend for sure. But as of right now, I'd probably put it as neutral. I'll have to consult with my team on what they think as well. But yeah, just looking at this specifically, the CPER ETF, which is my team and I's preferred ETF for having paper exposure to copper. Yeah, this is looking like it's in neutral trend, and it would probably need a little bit more in order to go bullish in our model. So maybe around, if it closes above $30, then for sure that'll be bullish. And then you just have to be patient for the next dip in copper in order to snag some to confirm the trend. Yeah. What does the VIX below 20 means? Typically when the volatility index is like in the teens, that's, pretty much a low volatility level where you have a higher probability of things remaining in a bullish trend. If it gets above into the 20s and 30s, well, above 30 is like freak out mode, right? That's usually when the markets are crashing and everyone's panicking that it's the end of the world. And then, in the 20s, um, it becomes less of like a buy and hold type of scenario, right? Where you have to be a little bit, paying attention more to the buttons. Is it similar to RSI? No, it's not at all. The RSI is a momentum indicator, right? It's a single factor indicator, whereas our trading ranges deal with momentum, price action, performance, structure, the macro data, volume, volatility. There's a lot of different things that go into it. So it's definitely not similar to RSI. The RSI is single factor. Where can we find a free chart on net central bank liquidity? I actually created the first one in TradingView. So if you actually, I'll have to update it, but if you go to indicators in TradingView and type in central bank liquidity, you'll see this here. It says Johnny Zerty. It has 157 boosts. I think it's the only one there that's titled central bank liquidity. So yeah, if you just type that in, you'll see it there. Where do you shoot a DM? You can just follow us on either TikTok or Instagram. Instagram's probably easier because it's a lot more user friendly. So yeah, just reach out to us on Instagram, or you can go on our website, which actually is just launched, by the way. The new website is officially here, ready to go. Would love to hear your guys' feedback on this. But yeah, we have this just being launched today, actually. So if you guys want to go ahead and check that out, we have some cool things on here. But what you can do is you can also go to contact us on our website, and you can actually just shoot us an email, and either myself or someone from my team will get in touch with you. Man, the site is laggy right now. My internet's pretty laggy right now too. Can you look up PFLT? Sure. Is this the right chart? I'm not sure. A mutual fund. Pretty small market cap. Definitely in a bearish trend. Let me know if this is the right one, but yeah, this is a bearish trend. RSI and bearish divergences with volume. I mean, yeah, you can definitely use the RSI. It's not a useless indicator. It's something that's pretty important, actually. But just know that if you're going to use different technical indicators, use them together, right? And don't just use one that is, don't just use, 5 different momentum indicators. Use something with momentum, use something with volume, use something with historical volatility, use one with order blocks, things like that, right? So good questions though. Okay. Let's go to TikTok here. Let's see what your guys' questions are like. Appreciate the follows. Gold miners are looking good, I suspect. Real yields depressed, etc. Hoping for some further rate cuts. Yeah, I mean, gold miners, after having a couple years there of it being pretty silent, gold miners have exploded back onto the scene here. And so let me see if I can find it here. Yeah, so if we go to GDX, I mean, this is even a larger acceleration compared to gold itself. Gold miners are not gold though, so I mean, just keep that in mind. But when looking at the ranges here, hasn't really been giving too much of an opportunity at the low end of the trading range, right? Really, the last time you had any type of opportunity was end of June, beginning of July, and then on August 19th, and then again on September 18th. So really not too many opportunities after it's been going up on this huge leg here. But yeah, I mean, as of right now, it's nowhere near the low end of the trading range. But yeah, this thing's been pretty crazy. It just seems like it's just been hugging that top end. Pretty bullish, pretty bullish. It's cool to see the working dashboards on the website. Yeah, no, we have some good widgets on there, so definitely recommend you check it out. But all right, everyone, we're approaching 4:15 here. Let's go ahead and wrap it up. If you guys, again, would like these ranges sent to you for the SPY, Qs, and IWM, just send me a DM with the word daily, and I'll go ahead and send you a link so that you can join. Check out our new website, macro-optics.com. And we don't have a show tomorrow, but we are back on Sunday for the Sunday Macro Wrap-Up. Hope you guys have a fantastic weekend, and I will catch you in the next live stream. Bye, everyone.